Welcome to the March 16th, 2020 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, president, McGowanGroup, with a fast-paced tour of the global financial markets from what we're calling the coronavirus panic of 2020. And we'll go fast and furious with some important facts for investors, previous crises, and how to handle a current crisis with an eye towards great assets and reliable long-term cash yields. This is the Dow Jones Industrial Average, a good starting point for the crisis itself. The high, 29,568. The overnight low in futures, by the way, Thursday morning was 20,200. That completed about a 31% drop in the Dow Jones Industrial Average, the fastest drop of that magnitude in modern history. It all started just after Valentine's Day, of course, with the headlines that we see. When we look at this downdraft and what could be a capitulation, at least a temporary bottom, based on Friday morning's rally, Friday afternoons do tend to sell off for some reason in this crisis. And we've been covering the figures on the coronavirus. Some important information here. And that is, we went back to the swine flu, which was essentially a 2009 crisis. 12,000 US deaths, 60 million people actually infected with the swine flu, 12,000 US dead. Those are US figures only. Globally, the coronavirus topping 5,000 tragic deaths. The question being, how did the Dow do during that period? Well, if you remember, there was the crisis of 2008. We're about to get to crisis management and investment strategy, but in this case, it did not impede the Dow's 38% recovery during that time period. Maybe it could have been more, maybe it would have been less, but I wanted to put it in perspective because the U.S., much less in crisis than it was during the swine flu, which few people remember at this point, even though it was a tragedy that infected a fifth of the nation. Now we look at crisis management. This you'll find at NetWorthRadio.com. To me, it's one of the best disclaimers and the best education for investors. I want to cover what we did during crisis. It shows from the peak of 2007 a 6.24% average return at our last report. It shows a 7% 10-year return, and we did that with approximately 2/3 in fixed income. How did we do that? And how did we recover from each of the crises that are on our track record, which is the next page at networthradio.com. Go to the Mission tab. You'll find both of these. Full disclosure, how did our clients do net after fees? And as a group, what were the results? So I'm going to give you full disclosure on crisis. In the tech wreck 2002, a minus 14%. The next year we did 25%. What was the major allocation? It was domestic high yield bonds, by the way, for reliable income and deep discounts due to the tech wreck crisis. Here we have the great crisis of 2008, when the U.S. banking system was rendered insolvent. There is nothing that indicates this crisis is anywhere near that bad, where U.S. banks were technically insolvent. Well, we did a minus 31%, the next year a plus 46%. I want to talk about that downdraft. If you had a perfectly good Houston airport bond in the crisis paying 5% tax-free A-rated, you woke up one morning with the price below $70,000 on a $100,000 bond. And Andrew Orton, the Ortonator, was able to punch in a few good trades down there at 68. The bond recovered to par because it comes due at 100,000. That technique, increasing maturity value under control and forward income, is the assignment for investors during this crisis. So come down and get a plan, not a recommendation for your portfolio till you get one, and not without price risk and opportunity. Our goal is to get to record income, which we did, even though values were down. Houston Airport still paid, by the way. It was a good example. But we made more income in 2009 than we did in 2008, even though the values were down. Why? because a basket of good bonds, if there aren't any defaults, it still pays the same amount of interest. Better yet, if you can pick up a few bargains down here, you might have your solution. That's how we recovered from each of the three crises, 2018, 2002, and 2008. We recovered from those in less than a year. That's not a guarantee, but if you've got record forward income, deep discounts, and well-managed bond portfolios, that's your opportunity right now. Let's take a quick look here. If we go to one of our major holdings since 1992, this is a global high yield bond fund. Again, not a specific recommendation till you get a plan, but look at this. Boom. We are back at the 2018 low, and we're also back at the 2015. What was the total return? Well, if you reinvested, this thing's 131%. Dividends reinvested, that return about 7%. And it just went to a major discount. You can actually buy a basket of bonds with an estimated par value around $12, $13. It went below 10 this week, and it pays a good yield. What else is out there? This one is a domestic high yield fund. It is not in the portfolios at this point, but look at this. We are able to buy a basket of good domestic companies, B-rated, and we can get those at a deep enough discount to cover as much as depressionary default rates longer term. That's a nice bargain at a substantial discount in the high yield markets. For those that don't want any price risk, your money market yields are about to go to zero. And that choice is not going to be palatable. The money market's unlikely to cut their fees, and the T-bill's already at 0.25% this week. It makes a 7% yield look pretty tasty to investors coming out of this in the second and third quarters. All right, this one is less time history, back to 2015. What we're looking at here is the crisis lows, the credit crisis at the end of 2016, the 2018 mini crisis, and of course, at this price, you've got a yield of over 10% on a basket of bonds that has an estimated par at 25. It got below 20 this week, more than a 20% estimated discount to par, with a great yield and a well-managed basket. Those are the type of bargains that we'll be picking up in the portfolios, and the type of reliable investment that we went into the crisis with, but not without price risk. You don't get that kind of yield in a 0% market without some fluctuation, but that fluctuation could be in your favor going forward. That's the message today. All right, this is West Texas Intermediate Crude. What other category may be a great bargain with a reliable forward income? Remember, Occidental just cut their dividend. That's going to happen in a lot in the exploration and production, even the majors. But the pipeline industry may be one of the best bargains. In 2016, oil hit 27. You have companies in this space, the energy infrastructure, that actually doubled in about 9 months. Not a guarantee, of course, and not without price risk. But this is the market where you may get not only paid to wait and paid more because of a better price, but the appreciation potential helps you get to record profits. That's why I showed you the track record all the way back to the tech wreck. And West Texas Intermediate Crude at 32. Part of this is the Saudis had production of 9.5 to 9.8 million barrels a day. And MBS, a little delusional, I believe, when he said we're going to pump 12.5 million barrels a day. The U.S. is just below 13 million barrels a day. Congratulations, Texas. Of course, he and the Russians trying to attack the shale revolution. Well, the problem is they may not have the capacity to deliver their intended 28% production increase. Those are big logistics, and that's going to come into play. There are institutional predictions of oil at $60 towards the end of the year that we gathered this week from institutional traders. And importantly, When we disclose the entire group, each family's performance is different, and it's not a GIPS compliant track record because many are in different disciplines, more conservative, more aggressive. But this is actually worth reading because it does give you a clear picture of how to navigate successfully with, we post our track record. Unlike most teams that I know, we post it to the penny, going all the way back as far as possible and audited. I'm Spencer McGowan, your financial weatherman, here with you in a fast-paced tour. We want to help you through crisis, and we want to help you be a beneficiary. We'll be back next week with the update on the crisis of 2020. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowanGroup, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who are devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.